5 worst crypto mistakes that you must avoid. Crypto trading is frequently a mental battleground. You must either go against your instincts or trust your intuition. The cryptocurrency market is one of the most volatile on the planet. Making poor judgments is a possibility for both beginner and experienced traders. Simple errors may devastate your portfolio, drain your capital, and keep you locked in the job that you desperately want to quit. There's a saying amongst the experts in the cryptocurrency field that crypto market does not forgive even an honest mistake. So what are the most horrible cryptocurrency trading mistakes you must avoid? Well, keep watching until the end to find out. Let's dive right in. Buying a coin because it is dirt cheap. We all desire to become wealthy quickly. Do you want to wake up one day and find that the cryptocurrency you purchased has increased in value by hundreds or thousands of times? That would be fantastic. You can't buy cryptos worth hundreds of dollars and expect them to increase 1,000-fold for that reason. You believe that coins costing a few cents or less than a cent can multiply according to your expectations. You may also buy millions of them because they are so inexpensive. What happened to their investors, do you think? They almost certainly lost all of their money. Cryptocurrencies like Doge or Shiba Inu have proven this theory by rising thousands of times their initial value. However, most individuals overlook the fact that hundreds of different coins were formerly inexpensive but are no longer accessible. What do you think happened to their investors? They almost certainly all lost their whole investment. These super cheap coins might quickly depreciate to nothing. The closer they are to $0 the faster they can get there too. Before you stake your life savings on a rumored undiscovered treasure, do your research. If you don't have time to conduct research, stick to stablecoins with a track record of market performance. Pulling money out of long-term investment. Nowadays, YouTube videos, internet discussion forums, and news articles all claim that someone gained millions of dollars overnight thanks to cryptocurrencies. There has been talk about a top Goldman Sachs executive who gained millions owing to the rise in the price of Dogecoin and then departed his job. These articles lead individuals to assume that they too can make rapid money and retire early or become extremely wealthy. When such excitement develops, individuals tend to want to invest whatever they have to maximize their profits. Many people abandon their well-planned long-term investments to invest in the touted instruments in the blind rush. This is one of the most common financial mistakes. It's always a good idea to stick to your previously well thought out plans. If you've gone through the financial planning process and decide to invest, you should stay with it until the plan's finished to reap the benefits. You will never be able to achieve your objectives if you constantly break your long-term investing plans. There will always be a fresh gold rush and you will continue to pursue it without making much money. If the return does not meet your expectations, do not abandon your long-term investing strategy. Invest only surplus or fresh funds in the cryptocurrency market. Never invest money that you don't have, such as money that you've borrowed. Buying high and selling low. Buying high and selling low is a common mistake made by most individual investors. One of the reasons why individual investors do not earn from trading or investing is this. In reality, it causes people to lose money regularly. What if the price goes up too much and I'm not able to ride the waves? When the value of a coin rises, people believe it has a promising future. They feel concerned that they will lose out on a chance. What happens if the price increases too quickly and you aren't prepared to ride the waves? People put too much money in while the coin is at a high price because they are in a hurry to be part of the race. When the value of the coin drops, the same folks worry. Most investors are unable to hang on to their investments because they are unaware of the fundamentals of cryptocurrency. They go with the market's flow. They are now losing money since they are selling below their purchase price. The people who profit are those who purchase low and sell high. Before investing your hard-earned money in a coin, try to figure out why the price is suddenly soaring at a given point. Try to avoid the urge to acquire or sell coins depending on their upward or downward movement. You may not make the most money, but you will avoid severe losses. Investing a lot of money at once. Most new investors make this mistake. They spend all of their money on coins in a short period of time. They're trapped with the first price they see. They miss out on getting the coins at a lower price when the price drops, since they don't have any more liquidity. Currently, the cryptocurrency market is quite volatile. When a celebrity tweets or says something in the media about a cryptocurrency, the entire crypto market reacts. The replies are frequently vehement, causing coin prices to swing dramatically in either direction. If you're a novice, you'll keep an eye on the price movement throughout the day to choose the best moment to invest your money. You believe this is your time to grab some additional coins of your choosing, given the modest downward trend. But if the price climbs, you may feel compelled to add additional coins before the price reaches an unacceptably high level. The dopamine thrills will lead you to invest in every price swing until all of your funds are depleted much too quickly. Also, if you hear good news about a coin, you will try to invest all of your money at once because you do not want to lose out on a once-in-a-lifetime chance. During the day, resist the impulse to keep an eye on the price charts. Perform something different. Read a book. Do some cryptocurrency research. Concentrate on your academics or your major source of income. Divide your cash into several stages of the investment. Make a list of what you want to buy and stick to it. Not researching before you invest. Did you know that anybody can develop their cryptocurrency? And we mean practically anyone. Some cryptocurrencies may not even be legitimate organizations or businesses. Before you buy in a cryptocurrency, make sure you conduct your due diligence on the organization. Read the white paper for more information. Check CoinDesk or another trustworthy site for any true news about them. Investing in a cryptocurrency based on the buzz, the trend, or because their best friend's brother's uncle advised them to do so is a common crypto mistake. This one is destined for the moon. When it comes to investing, there is a method, and it's critical to have a system in place when researching cryptocurrencies so you don't participate in the pump and dump or a rug pull. There's still so much I want to tell you, so I'm going to split this video into 2 parts, so subscribe to the channel and keep an eye out for that. The final truth is that most crypto investors, particularly newcomers, lack a clear understanding of how to invest substantially. In addition, not understanding how to avoid typical mistakes might be expensive. However, you are now aware of the pitfalls to avoid while investing your hard-earned cash in cryptocurrency. Keep these errors in mind and try to avoid them as much as possible. The aforementioned tips might assist you in making secure investment. As a result, it might assist you in making a long-term return from your investment.